PepsiCo, PEP, has come a long way since the Pepsi challenge versus Coca-Cola in the 1970s. The company's push beyond drinks has helped Pepsi top its rival sales, and Pepsi stock is outperforming too. Today, we'll tell you PepsiCo stock analysis. Is Pepsi a good buy today? Number 8. Stable earnings equal steady dividends. Ramon Laguarta has been at the helm since October 2019, when former CEO Indra Nooyi stepped down after 12 years as the food and beverage giant's first female chief. While Pepsi is not known for strong earnings growth or stock price performance, it stands out for its steady income stream. The food and drinks giant is a member of the S&P 500 Dividend Aristocrats, companies that have increased their dividend payout for 25 or more consecutive years. It currently pays a quarterly dividend of $1.0225 a share, or $4.09 for the full year. That works out to an annualized payout of 2.8%, more than double the S&P 500's average 1.39% yield. A steady earnings track record helps keep the dividends coming. Pepsi's 5-year earnings stability factor is a 3 out of a range from 1, most stable, to 99, least stable. On April 14th, the snack foods giant reported first quarter earnings and sales that beat Wall Street targets. We're pleased with our results for the first quarter as we successfully overcame challenges related to difficult year-over-year comparisons, uneven recoveries across many of our international markets, and weather-related business disruptions in the U.S. Chairman and CEO Laguarta said in a statement, "Our results are indicative of the strength and resilience of our highly dedicated employees, diversified portfolio, agile supply chain and go-to-market systems, and strong marketplace execution," he added. After PepsiCo's quarterly earnings and sales beat, Pepsi stock staged a recent breakout and is trading near all-time highs. Number 7. PEP stock fundamental analysis. IBD Stock Checkup assigns PepsiCo a 51 composite rating, which gives investors a quick way to access a stock's key growth traits. That puts it 14th in the 30-stock packaged food group, which includes Flour Foods, FLO, and J.M. Smucker, JAM, a 69 earnings per share rating. Part of the overall composite score reflects a 5-year compound earnings growth rate of 4%. Profit dipped 2% in 2019 and was flat last year after 3 years of gains. Analysts expect a 10% gain this year, followed by an 8% increase in 2022. An ASMR rating, sales plus profit margins plus return on equity, puts Pepsi in the top 20% of all stocks based on those metrics. Last year's ROE of 54.5% is well above the desired 17% minimum for growth stocks. Sales grew by single digits the past 4 years. Wall Street forecast a 7% increase this year and 4.5% the next. Number 6. Pepsi stock technical analysis. On the technical front, Pepsi's 29 relative strength rating means it's trailing 71% of all stocks. Its relative strength line, which compares a stock's performance to the S&P 500, is also well off highs. After recovering from a 31% drop amid the coronavirus crash last year, Pepsi stock began shaping a cup base in January. It then added a handle in early April, according to MarketSmith chart analysis. Pepsi climbed past a 145.06 buy point, or 10 cents above the handle's high, this week. A C+ accumulation distribution rating points to slightly more recent net buying versus selling by mutual funds. Institutional shareholders include highly regarded funds including Fidelity Contrafund, FCNTX, and Franklin Growth Fund, FKGRX. Number 5. PepsiCo. What is the valuation? It should be no surprise to anyone that PepsiCo trades at a premium. The company's market share and overall positives as a company virtually ensures that this premium over time is upheld in a quite stable manner. You can see a trend to a premium of around 21 to 22 times on a 10-year basis. The company has averaged an EPS growth rate of about 4.9% over the same period, and we expect around 10% growth in 2021 from FactSet analysts, coming in at around the company's own expectations. You can see that the company's premium valuation didn't really disappear during any time in the pandemic. At most, they traded at around premium. There's definitely some midterm upside to the stock as this valuation. In earnings expectations materialize, we can see 3 to 4 year returns of around 7.5% per year or 22.4% until the end of 2023. This needs to be put into context, of course. We're looking at a 22.4% return from an investment in PepsiCo. This is safer than most investments that are available at this time. Even if it doesn't fulfill my requirements for an investment, which is around 30 to 33% over a 3-year period, it's off by only a small margin. It's also very rare to see Pepsi below its fair value of around 22 times. Number 4. Why PepsiCo stock is a good bet for long-term investors. PepsiCo stock, NASDAQ PEP, has increased more than 9% in the last 1 month, and it now trades at $141 per share. The rise was driven by economic as well as company-specific factors. The successful rollout of the vaccination program and stimulus measures set to be announced have led to expectations of fast economic recovery and rise in consumer spending. This will benefit a food and beverage giant like PepsiCo. PEP, minus 0.2%, improves its sales and margins. Additionally, the recent rally is also a reflection of the continued innovation at the company. With PepsiCo having benefited from the at-home consumption trend, it has recently introduced the Neon Zebra, part of the non-alcoholic cocktail mixer category, in 4 different flavors to capitalize on the pickup in the at-home cocktail making trend. It also launched a new juice product line, Fruitly, for its young consumer base. New launches to take advantage of the latest consumption trends and when the economy is set to recover have led to expectations of healthy revenue and earnings growth in the coming quarters. But will PepsiCo stock continue its upward trajectory over the coming weeks, or is a correction in the stock more likely? According to Trefis machine learning engine, which identifies trends in a company's stock price data for the last 10 years, returns for PEP stock average close to -1% in the next 1 month, 21 trending days, period, after experiencing a 9.3% rise over the previous 1 month, 21 trading days, period. Number 3. Is Pepsi stock a buy right now? Shareholders have witnessed an increase in enthusiasm from smart money in recent months. PepsiCo Inc. was in 56 hedge funds portfolios at the end of the fourth quarter of 2020. The all-time high for this statistics is 65. There were 52 hedge funds in our database with PEP positions at the high of the third quarter. Our calculations also showed that PEP isn't among the 30 most popular stocks among hedge funds. Pepsi stock is in potential buy range from the $145.06 buy point of a cup with handle base. The buy zone tops out at $152.31. Shares remain in potential buy range, which tops out at $152.31. A couple of caveats. Volume was weak at the breakout, running about 25% below average. The strongest breakout trend to occur in volume at least 40% higher than normal. Pepsi stock's composite and RS ranges stand well below the 90 minimum of leading growth stocks. But the company's earnings track record, steady dividends, and diversification in the beverage and snacks market may appeal to some investors. Number 2, the time could be right. In my opinion, the appeal of owning PEP transcends the business fundamentals. For starters, the performance of the stock has only been loosely correlated with that of the S&P 500 historically, at the correlation coefficient of 0.55 since 1985, or 0.51 in the past decade only. Blending into a portfolio stocks that sometimes zigs when the market zags is a great strategy to increase risk adjustment returns. The story gets better once valuation is taken into account. PEP currently trades at a same-year PE of 21.5 times, a 12-month low, adjusted for the temporary noise caused by the depth of the COVID-19 correction. The dividend yield has recently surpassed 3%, something that has only happened for more than a few days in 2011 and 2018, over the past decade. Lack of market enthusiasm is probably justified by the early stages of the economic recovery expected to take place in 2021, which favors cyclical, high beta, and small cap stocks over defensive ones. But it's during times of investor skepticism and share price weakness that betting on out-of-favor stocks could yield the best results over time. Consider that historically buying PEP after 10% drawdown shares are currently 12.5% off the December 2020 peak has increased forward 1-year returns by about 6 percentage points per my estimates. Number 1. In conclusion, the combination of 1. Strong fundamentals, 2. A recent improvement in financial performance following the COVID-19 crisis, 3. The diversification benefits of a cycle-agnostic business model, and 4. Decreased valuation leads me to consider PEP one of my favorite under-the-radar stocks in the market now. Buying shares today may not pan out in the very near term, but I believe that the trade will prove to be successful over a longer period of time. Do let us know in the comments what are your thoughts about PepsiCo stock. Please subscribe to the Stock Advisor. Thanks for watching.